Hello everyone, myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we are going to take a look on the OSMA, the Oscillator Moving Average. This is part of the ongoing series in which we are considering the various moving average indicators which can be utilized to build automated trading algorithms on the Visual JForex platform. So far we have done these moving average indicators, and now in today's session we will see how we can utilize the OSMA. The OSMA stands for the oscillator moving average, and as you can see from this description, this is an technical analysis tool, and in which we try to see the difference being created between the oscillator and the moving average, and we plot it on the chart in the forms of bars. And for our purpose we will be basically relying on this technical indicator block to create and then optimize the setup. It's part of the MA series. So here comes the OSMA. We have to connect this to the start point, which can be on candle, on tick, or trade event. All three will do. So we get started, and we will consider its functionality. This is fairly easy to calculate and understand, and as we are dealing with automated setup, we don't really have to do any manual calculation here. Still, for understanding, we will see how it is on the charts. So as you can see from the charting, we can use this oscillator to see in which direction the wind is blowing. So in a way you can use this to gauge the momentum, and depending on the side of the momentum you can decide to take trades. In a basic setup you can use this change on the side of the deviation, the oscillator, this value, the output value. Whenever it crosses from negative to the positive territory, you can consider it as a trend change on the bearish side, and whenever it crosses from the positive side to the negative territory, you can consider it the sign of the starting of the negative momentum, the bearish momentum. So that way also we can use it, or you can simply do the comparison, and whenever you see that the oscillators and moving averages deviation or the difference is on the rise, you can consider it as the continuation of the trend, and on that count you can look for the buy trades, and whenever these values are falling and are in the negative territory, you can continue to look for the sell setups. Of course, not every time you will get the perfect trades. Maybe sometimes you might even go wrong, but that's the part and parcel of the trading, and of course no trade setup is perfect. So that will hold true for the euro USD, this oscillator based trading assessment as well. As you can see from this point here, we see that OSMA drops from positive territory to the negative territory, and of course the values are falling, but here all of a sudden we get almost a 40 pips move on the higher side, and then eventually the price drops. So such instances can happen, and to guard against that, all we can do is keep a stop loss to not that far and not that close, so finding an optimum level of course will be tricky, but that's how you can use this, and the oscillator should work fine. Now let us consider its constituents and then use on the Visual JForex platform. So here the default instrument, as you might be aware already, can be any instrument of your choice. For example, if you want to use Euro USD, you can do that. You want to make a change, you can do that as well. So for example, let's go with the AUD JPY for today's session. All you have to do is change it, take the instrument from that drag down list, and apply it. So here also we change it to the AUD JPY, and we will have to see it from the list. Here comes the Australian dollar versus Japanese yen. Okay, here we have plotted it. As you can see, here is this change of momentum is working better compared to the last instance we saw in the Euro USD. But that's not the point. The point is that we will get a fairly good idea of the momentum change in the underlying instrument, and then we will be in a position to trade with the trend, and that's how I think we can utilize this OSMA indicator. For that, many times you will need to take multiple blocks, multiple indicator blocks of the OSMA to do the comparison. Suppose if you take two OSMA blocks, then you can use different look back periods and do the comparison between the two output values. So all you have to do is join the flow and consider its output values after defining the parameters. Now, default instrument, we have defined the time period, as I said many times in the earlier sessions as well. And even if you are new for today's session for the first time, the platform provides the opportunity to use any of the time frame which are permitted here. So all you have to do is take the appropriate time frame from this listing, and more often than not, I stick with the hourly. For example, in today's session, let us go with the 30 minutes time frame. We can do that. The time period will be defined for the each candle at 30 minutes, and the calculation for OSMA will be done on the 30 minutes candlestick. Now shift is the look back period. As I said, we can use these shift values to do the comparison. If you put the shift value as 0, then the current output will be taken into account for any calculation which you might do, and unless and until this candle closes, we will have this output which will keep varying depending on the price action which we see in that particular time period. So we have to be conscious of that fact as well. And if we want to compare the current value to, say, the value 2 hours back, then all we have to do is take into account this candle period and multiply it appropriately. So here for 2 hours back value, we will need to put the shift at 4, so we will get the 2 hours back value. And then these are the parameters, and this can be changed. These are as per the MACD setup. Here we are using the MACD and the signal line, MACD as the oscillator and the signal line as a moving average, and we are plotting the deviation between the two, and that's how this typically works. But if you are finding that some other setup is likely to be more appropriate, then you can do a bit of an experimentation and put those changes into the practice by simply changing those values. Now if you want to edit it, you can do that. All you have to do is look at these input values. Here the calculation is being done on the closing price. We will also see just after we consider these input values that here also we can make the changes, and the calculation will be happening on different price points. Now the fast period is at 12. If you want to use different setup, you can do that. Okay, we have changed this to 13. Here we are going to make this to 60, and for example let us make it to 20. Okay, all right, it has been plotted. And now as you can see from this chart here, it has made a lot of difference to how these output values are looking at this chart now. And you have to find a setup which as per your requirements will do a fair job and will give you the most profitable setups signals. So that's why you need to do the changes and you need to do the fair calculations with different setups, and then you will realize that different setups will have the different probabilities of the profitability, and then we have to choose one and then customize our indicators accordingly to get a fair idea of the things. So now that we change there, we will have to change here as well. And let me see the edited values, the combination of 30, 60, 20. So same combination can be applied here. All you have to do is put those values here and you will get the setup 30, 60 and 20. Okay, and for doing the comparison here also you will need to make the same changes. Now we are not changing these values, but if you were to compare two values of the OSMS, then for doing the apple to apple comparison you will have to put the same input variable, just that this shift value should be different for the doing the comparison for different output values in different point in time, but the other parameters should be the same. Now moving on to the output value, as I said, output value can be put in any if else statement or even in any calculation to do uh, a calculation, or if you are putting it in a if and else statement, it will act as a condition. The upper side also casts some difference because there is a spread between the bid and the ask side, so there will be minor difference between the OSMA's output values depending on how it is being calculated. The applied price, now coming to the applied price, the close price, open price, high price, low price, median price, typical price, or weighted close price, or even time can be used as different input parameters. And here we will try to see how, or not add, how the changes in the applied price leads to the change in the output value. So we will do now, just observe these indicators output values on the lower side of the chart, and here I will change this input data price. Now it is being calculated for the time being at the close price. If we change it to the open price, as you can observe, some of the bars have changed, and that means that the open price the output value has changed. Again, high price gives you a different output, low price gives you a different output. Broadly speaking, the momentum will be on the same side, but of course some deviation might be seen, and that is simply because we are calculating this output value while using the different input values. Okay, so that's, I think it is showing some lag. So that's it for today's session, and I hope that you will be able to use this indicator on your own for defining a setup which will be profitable and which will give you the optimum trading entry and the exit point. So you will have to do the experimentation, and as we try to change this combination and then the price point for calculations as well. So all you can do that on this Visual JForex platform, and you can develop the algorithm, and then after testing you can do the testing on the historical tester here for any amount of time for here we have these various options, and if you choose to do the historical testing on custom data, then you have to just fill in the time, the dates, and you can test your strategy, your algorithm on that time period. So you can build a profitable algorithm simply using these tools being provided by the Dukascopy Bank SA, and I hope it will be a promising as well as a fulfilling journey here onwards. Thank you all for joining in. We will be back tomorrow with a fresh indicator, with a new indicator. Till then, have a fabulous time ahead. See you tomorrow. Goodbye.